Everybody, this is Ospreyeye from mychartcoach.com, and we're going to take a look here at ticker symbol FB. Okay, let's take a look at Facebook. All right, today a red candle formed. Yesterday a black candle had formed. There was a small wick on the upper candle, so it was not a hanging man, but it was very close to a bearish hammer. Hammers formed at the top of an uptrend, signals downside risk, and so even though there was a small upper wick, which a lot of computers will not recognize this as a bearish hanging man, but it really is. There was a similar type of setup. You've got the pullback today, the red candle. Now this is signaling downside risk. The candles are working back into the bands. As you can see, your Facebook has been on this very strong uptrend. Okay, notice the lower wick on today's candle hit the EMA 4 at 151. That is the key level to hold. If that level breaks, you can see a drop down here to EMA 8, currently at 149. That is lined up with the top of the gap. If you look here, there's a gap between a high of day on the 27th, which is right here, and low of day on the 28th. And so if there's a close below EMA 4, you could see a drop down here to fill this gap. So the gap is lined, a gap fill right currently is lined up with EMA 13, which is at 147. As long as candles are staying above the middle Bollinger Band here, the uptrend should continue. Facebook's been on a very strong uptrend. Any kind of pullback is likely to just be a pause in the upward action. As long as candles are riding EMA 4 support higher, the chart is very strong. The signal is to ride. If there is a close below EMA 4 on the daily chart, that does signal to look for a reload lower. Okay, so if you check out here on the 15-minute chart, you will notice here that we've got candles that are riding the middle Bollinger Band lower. That is this dotted purple line. When the 50 simple moving average broke here, going into the close on the 2nd, that was a red flag. And then after the gap up open, or actually there was a run up, and then gap up open and a pullback here to start the day today. And once the candles got back below the middle Bollinger Band, that was signaling more downside risk. And then when the 50 simple moving average was confirmed resistance, that was signaling once again that the pullback was going to continue. That there was a double bottom here going into the close. So if you notice here, you've got this double bottom here at 151. So this is the key level to hold, 151.50. If that breaks, you could see a drop. The next simple moving average support level is the 200 simple moving average at 149. Down here, this was a big support level at 150. So yeah, as long as candles are forming below the 50 simple moving average in the middle Bollinger Band on the 15-minute chart, that is going to signal more downside risk. Once the middle Bollinger Band turns into support, that's going to be a signal the chart is heating up. And then once the candles get back above the 50 simple moving average, that's going to be a signal that it's ready to rock and roll. And as you can see here, and continue the uptrend, notice back here when the 50 simple moving average turned into support back here on the 27th. A big run followed when the 50 simple moving average broke. That is usually when the downtrend begins. Okay, big bullish, not necessarily bullish, but a big volume spike into the close. There was a big upper wick, so we'll see if this was were people loading for the bounce, or yeah, if that was more profit taking. Okay, thank you for viewing this chart. If you'd like to learn more, check us out at mychartcoach.com and our YouTube channel at mychartcoach.com. Thank you.